Hello everyone and welcome back to TradingView My name is Tagatha and I'm going to be taking you through some of the highs and lows of what's been going on in the market recently. I'm not going to lie to you, we have had a jam-packed couple of weeks filled with earnings galore. We have heard from big tech, finance, big pharma, regular tech, lots of techs happening here. Welcome to 2022. But that's been a lot of what has been moving the markets up and down the last couple of weeks. We're going to kick things off with a daily heat map, which, as you can see in front of us, is looking super mixed. Markets just opened Thursday morning. People are still digesting yesterday's CPI news. However, most major US indices did in fact end Wednesday up sharply higher after CPI data showed that inflation is so far looking to be cooling. But if we slide things down to a monthly heat map, things are looking rather luscious, rather green. July was actually a pretty good month for the stock market, despite months of war and inflation-induced madness is probably the only way to describe it. But things so far are pointing towards another potential month in the green for August. We have gotten a bunch of economic data the last couple of weeks, starting with GDP data, which really freaked everyone out because it basically showed that the economy has contracted for the second straight quarter. Now, the reason everybody freaked out is because that is a technical indicator of a recession. However, it's just a technical indicator and it's only one of many out there. Nobody actually seems sure yet whether we're in a recession, whether one's coming, or even what one is. As it turns out, defining a recession is rather messy business. There's more details here in this Investors Chronicle article if you want to do more of a deep dive than we have time for today. We obviously also got jobs data last week, which surprised everyone by showing that the jobs market continues, or the labour market continues to get stronger and stronger. The US economy added 528,000 jobs in July, which is about double what anybody was expecting. This is a little bit of a double-edged sword because on the one hand, it means that the economy is looking strong and it means that wages could be pushed up. However, on the other hand, that's pretty much the opposite of what the Fed is actually trying to do. They want to weaken the economy to bring down inflation, essentially. How's that going? Obviously, CPI data showed that inflation does seem to be cooling. It's down at 8.5% for July, which is less than anyone was expecting, and has got people thinking that perhaps inflation has peaked. However, that is actually not the Fed's preferred measure of inflation. They like to look at personal consumption expenditures, and we're still going to have to wait for that data to see how that goes. However, they do like to look at core CPI, which excludes food and energy prices because they're so volatile, and that data showed a deacceleration as well. So people are kind of hoping that the rate hikes will slow down with the aggression come September. However, the chat on the street still is for a 75 basis point hike come September. On that note, the Bank of England made a historic move by hiking rate hikes for the 6th time this year. Don't worry, that's not the historic part. The historic part is that it came in at a 50 basis point hike, which was its harshest hike since 1995. So my whole life, what a time to be alive. They also gave some fairly worrying predictions for the UK economy, saying that they are expecting a recession to arrive in Q4 and for that recession to last around 5 quarters. So buckle up. Buckle up there. How are silver and gold doing? I hear you ask through the lens of my camera. Gold, as you can see, is having a nice little moment. It had a pretty depressing July, I'm not going to lie to you. However, it has been rallying the last couple of weeks, as has silver, which was actually the worst performing, so far is actually the worst performing precious metal of 2022. As you can see here, this year has not been kind to silver. However, since about the end of July, things have been looking up. And last week when jobs data came out, silver went up 3.87% and gold had a little moment in the sun as well, if we take a look there. And that is because people are thinking, okay, maybe this is a good hedge against inflation. It's interesting because it's taken over the dollar, which until recently had been performing incredibly well this year. A lot of people have been flocking to the dollar as a hedge against inflation, thinking the Fed is so aggressive, I'm sure my money's safe there. But recently there's been a little drop there. And as you can see, when CPI data came out yesterday, there was a massive drop in the dollar. However, back to silver, analysts are actually suggesting, or positing rather, that silver's bottom could have already been found and that demand for jewelry and electronics will send its prices back up through the rest of the year. So definitely want to watch there. Oil and natural gas catch up there as well. There's been a little uptick in oil, but overall not looking particularly good. And neither is natural gas. The last couple of weeks, obviously been a little uptick this week, but struggling a little bit. However, moving on from commodities, we've got something much more spicy for you, and that is the revival of the retail trader. Get ready for some drama. So we'll start with AMC, because who doesn't love a OG meme stock? Basically, last week Thursday, after hours, AMC reports their earnings. Prices thump down 11% in after hours trading. Everybody's like, what's going on? Well, turns out that AMC, on the one hand, did see their revenues almost more than double, thanks to blockbusters like Top Gun and the food and drink business that brought in, because that's a really high margin business. On the other hand, it missed expectations on both ends. So that was a part of the price movement. However, that wasn't actually the biggest news of the day from AMC. The biggest news is that they declared a special preferred stock dividend that will be trading under the APE ticker, obviously as a nod to the apes that sent its stock absolutely soaring a couple of years ago. In the beginning, investors were a little bit like, hang on. You wanted us to let you issue more common shares last year, and we didn't let you. So now this is just a way for you to raise cash. And then Silverback, Mr. AMC CEO Adam Aaron, was like, well, yeah, but you should be really happy about that, because it basically takes the security risk off the table, because it means we can raise cash whenever we like, and it means the odds of you losing all your money are fairly slim. So have a party. And guess what? Have a party they did. As you can see from this price chart in front of us, AMC went soaring 18% on Friday despite the after hours drop, and the gains have continued slower but rather steadily through the week despite a little drop on Tuesday. The apes have been losing it on socials. It's largely down to this dividend. It's obviously gotten a lot of the crypto community involved as well. But this was just them getting warmed up. A ton of other retail trading faves were, trending all across social media. We're going to start with Beyond Meat. Everyone's favorite vegan burger place is not doing so hot on the earnings front. They reported super disappointing revenue and earnings results for the second quarter. However, retail traders don't care. And up that stock went 21%. They, again, have not paired very many of those gains, but the price action has definitely slowed down slightly. Another retail trading favorite, Bed Bath & Beyond, has also seen some major action recently. They did announce last week that they were discontinuing their Sage line, which is a private line and is unlikely to be the root cause behind these kinds of gains. But either way, Bed Bath & Beyond saw 32% last Friday and was up another 40% on Monday, and is still maintaining those gains so far. As for newcomers to the meme stock scene, we actually do have the retail trading crowd rolling out the red carpet for a tiny company based in Hong Kong called AMT Digital, whose investors are now literally laughing their way to the bank, because this little company went public about 2 weeks ago at $13. Nobody had really ever heard of them. They're tiny. They've got like $20 million in revenue or something like that. And then on last week, it overtook Goldman Sachs as the 5th largest financial company in the world, which is madness. If we take a look at this, you can see that there they went, $13, going public on the 15th of July. By the 2nd of August, they were trading as high as $2,500. Obviously, those gains have been paired ever since, but trading at $213 as we speak, you can still see those are some pretty impressive gains the last couple of weeks, and investors must be super thrilled. It's unlikely we've heard the last from AMT Digital. Their parent company saw about 400%. A 400% increase last week as well. So unlikely we've heard the last of them. Keep an eye out for their ticker on your social streams. Other than that, we have got more earnings for you to look at, then you can shake a stick at. We don't have time to go into all of them today, but I would strongly suggest heading over to our Snaps page. We have got huge price movements from Uber and Lyft after they reported an unexpected boom in ride sharing. We've got some disappointing news from crypto-based companies like Robinhood and Coinbase, which really surprised nobody considering the crypto winter we've all been enduring the last couple of months. And we've also got Virgin Galactic and its like 7,000th space service delay, which obviously left investors feeling less than impressed. So take a look at our Snaps page to see all of that and more, and please do subscribe to our daily email in your inbox by 9 a.m. Until we speak next time, always remember to look first and then leap.